Hey everybody, welcome to the Ankerstar Wealth Morning Show. We got Mike and I for you this morning and three important topics. First of all, I don't know if you heard Bitcoin in the news in the past couple of days or so. Since the election, Bitcoin has gone straight up, a rip if you call it, and we were actually kind of called for that. So I'll show you the chart, show you kind of the history of the year, right? You don't just get to take a victory lap now, right? So we'll go through the history of our investing in our client accounts for the year. And then, of course, we'll kind of project it forward. Where's it going? Nobody knows for sure. Run away from people that can tell you that they know everything for sure. But we'll give you at least our thoughts on the issue. So that's topic one. Topic two is twofold. It's how to get kids started in investing, but it's also how to gift money to your kids. You're going to hear this a couple times. We have Christmas coming up, and one thing you can do as a parent, or one thing you can encourage grandparents or granduncles or uncles or any of your family that wants to support either your kids of any age. There's a twofold purpose. A, to get the money into their accounts in their own names. That's kind of cool. If you got extra, you can do that. And secondly, it teaches that lifelong discipline, gets them knowing at least what a custodial account is, or how to invest, any of that stuff. Really worked for me as a kid when my parents got me started at 16, and here I sit today. So kind of go over some of those tricks of the trade there to kind of get in front of that Christmas thing that's actually happening. Anybody decorate out there yet?
My tree's up.
We're thinking about it. Yeah, we're thinking about this year. We're going for Thanksgiving, so we're thinking about putting it up soon. Anyway, and then lastly, Mike's going to talk to you about something that might be more on your mind since you've watched the market go pretty much straight up till today, and that's Trump and your money, and specifically Trump and Trump's second term and your money. There's a ton of stuff that Mike's going to peel back there, and I will let him do that. Before we start, it's a financial education presentation. You have to do your own due diligence for acting upon anything you hear on this show. More disclaimer information is available at ankerstarwealth.com, and the opinion expressed are Mike and mine alone. So let's start with Bitcoin and talk a little bit about the journey. So you should be seeing a CNBC here in a bright white square of the Bitcoin. That is a 1 year look, and 1 year is a little bit better than just year to date because let's flash back to a year ago. Right. Went to a Bitcoin conference last June, listened to Rick Edelman and Josh Brown, basically respected names. Follow who you want. Those are who I follow. And I was just hearing them talk about this Bitcoin thing and the finite number, and I had studied it for like 4 years off and on. Rick had a book out, read the book cover to cover, and went, okay. Went to another conference this year. Rick has another book out, read that one cover to cover. So I've hit the orange I believe button, not in the orange president. I'm saying the orange coin that's out there. And it's not an actual coin, but Mike can show his while I'm talking if he wants, if he's got it laying around there.
Oh, here it is.
There you go. That's what's called not an actual Bitcoin. Do not break into Mike's home and try to steal an $86,000 chunk of worthless metal.
But I will sell this one for $45,000.
There you go. He'll cut you a deal, half off. So the journey was, you go crypto and you flash back and it's a bunch of crap and it's make believe and crypto nerds running around all over the planet in hoodies and fancy tennis shoes, right? And everybody's like, haha. And people are making money and losing money hand over fist. Well, let them have it, right? This is a gambling thing that's going on. Well, the difference with Bitcoin is there's a finite amount, right? And it's mined on a schedule. And in 2040, the last one will be mined. And then there's only so many in existence. So when you think of things that are finite in existence, they go up in value over time. That's separate from a crypto. That's just anything that there's only so much of goes up in value over time, again, with inflation and or the demand that's associated with the limited number that's out there. So last year at that conference, so June 2023, they were talking about these Bitcoin ETFs, which we use BITB. There are several out there now, and 11 of them came to life on January 11th. So let's take to where that chart is right here. So back in here, there was kind of a run up prior to, why is this not working? Anyway, there we go. It's a lot. Hey, picked a red on us. So there was a run up into the whole idea that there's going to be ETF to own Bitcoin. And you know what? Did I own it prior to that? I owned it through a trust, GBTC, and I owned it through a company called MicroStrategy, which is a proxy. I'm not talking about either of those today. But last thing I wanted to do is go get a wallet, whatever that is, and put crypto in it, whatever that is, and remember a 128 password character password, which I can't remember the 8 to 12 ones I have. So who can remember that? And I'm not supposed to write it down, even though I have most of mine written down somewhere, right? So none of this works for me. So call me old school or just old. I wasn't going to do that, but I did want to own it through the public markets, however I could. So those were my two options prior to January 11th. January 11th was the Bitcoin holiday, if you will. Should be a national holiday. We shall see. But that's when they released a bunch of these on the market. We picked the cheapest one with the experts in charge at Bitwise. Thanks, Bitwise, for that. And you can see it sold off a little bit. Yeah, right. Anytime something's new, it's a buy the rumor, sell the news. So it runs up and then, oh, it's here. Everybody sells off. Okay, fantastic. Then it had a huge rip up. I mean, it was a rip. I remember sitting there like just watching a chart, which is not great. When something's moving so fast that you're sitting there watching the chart. When you're in our business of professional money management, you have to like peel yourself away from the face magnets called charts, right? Because you look at them all day long if you want. And then, but look at the action from there through mostly the peak there in March, all the way to kind of where it recovered in October, pretty flat, pretty consolidation. And if you go back years, Bitcoin traditionally does this after the halving, blah, 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 Bitcoin speak. But what happened here, we get Trump elected and then it rips higher to a significant amount. 10% plus yesterday. So where's it going to go? If you have too much time on your hands, go to Twitter and search Bitcoin. You can find all the opinions in the world that are out there. I will say that I was able to have a talk. I was on a call where it was, only 15 of us with Rick Edelman and Matt Hogan from Bitwise, is the chief information officer there. And both of them were saying 100K by the end of the year. This was before the election when it was sitting in the high, down in the 70 range. Right. So, I mean, they were spot on so far. So, hey, ripping up, is it going to make 100K by the end of the year? I actually think it will. But we shall see. Right. But long term, fast forward, how high can this thing go? Really, since there's a finite amount, I think it will really, as we get closer to 2040, which you're like, well, that's not really soon. And it's like, well, it's not that far away either, because life does move fast if you haven't noticed. But yeah, as it gets to 2040, I think this thing is going to continue to scream higher. So there's kind of, some thou shalt not sell your Bitcoin. And there's the, this is the way, if you're a Mandalorian fan. There's lots of reasons to own it, which we'll get into another day, but we certainly like the price action that's going on in Bitcoin. So while I switch topics, Mike, anything to add?
Yesterday, I had at least two people ask me, how do I buy a Bitcoin? Are they like $88,000 each? And I was like, one, you're not going to just buy one and put the coin and put your password. There's ways through ETFs to buy them. So people are starting to ask questions as this FOMO, like, oh my gosh, I'm seeing in the news, it's up 10%. So, I would expect you're going to hear people start to ask more like, wait, can I buy one of these? But that's not how it works. And I was like, yeah, we use ETFs. We do not take custody. We do not record passwords. We're not in that business. So anyways, that's all I'll say.
Yeah, absolutely. So it's one of those, we chuckle about this in investing, but it is such human nature to where somebody doesn't understand something and it's 50,000 and they'll say, absolutely no way would I buy that. That's too expensive. And then it rips to 80,000 and it's like, I must own it now. Please, have to have it today, that sort of thing, even though you still don't really understand it. But anyhow, the advisory team here is all versed at different levels. But please reach out to us, and we won't call ourselves experts by any means. I will say what we are expert at is the thesis, and the thesis is airtight. I'm excited about it more than, not more than, but as excited I was about Apple in 2010. So, long time ago. But these don't come around very often, and I really like it. But that's a personal opinion. Reach out if you want to know more. Okay, I pulled up a screen for you called the annual gift tax. Yes, you can give money away. Should you give money away? Well, that's a personal question. I tend to say you should have about 3 million before you start giving money away in your life. But if you want to give money, there's a different way. So everybody's like, well, I'll just tune out because I don't have 3 mil. It's like, hold on, wait. There's a way to affect your family's life, like, raising kids that costs us about $250K as parents per kid, right? Mike is an expert because he has 5. But the maybe there's synergies there. Maybe it gets worse. I don't know. I have two. That was all I was cut out for. But you can encourage others because Christmas is coming up, right? And grandparents tend to be more wealthy than you, and you have more money than your kids. So there is a mechanism to share that money. Again, you get the annual gift tax limit for 2024, which is what we're talking about here, is 18,000. For if you're married, so it's grandma and grandpa, if you will. You could go up to 36,000. Those are pretty big numbers for Christmas. But when you think Christmas, instead of giving a bunch of toys or electronics that they're going to use for 5 seconds or may never use or whatever, or just cutting a check, because a lot of times that's becoming more popular, you can open a custodial account on behalf of that child, put funds in it, and then invest it. Yes, we offer that service, but yes, you can do it on your own. It's better to kind of go with us for something like this because there's a bunch of little rules, but certainly you could do it on your own if you wanted. There's kind of three ways to do that. Is first of all, think education first. Say the grandchildren or your kids are 5, 3, and 1. And you talk to your parents about, hey, I heard Steve today on the show talk about gifting money to kids and putting it in their 529 plans. You know nothing about your kids. Well, they're all geniuses, of course, and they're all great looking. But other than that, you don't know if they're going to go off and earn scholarships or even go to college. I mean, yeah, we have no idea, right? But you can have, if the grandparents are so encouraged, say, hey, do you want to put like $500 for each child into their college fund? And maybe we'll kind of do that year over year. And then by the time we kind of, into those teens, when they kind of at least are projecting towards a path, then you can, choose to add more or whatever. But yeah, it's a good way to get grandma, grandpa, aunts, uncles to participate in kind of your child and take a little bit of the load off of your back, because it's ultimately going to come to you or to the child if they use student loans. But so that's one way, is to gift it into a 529. If you don't like those, okay, I get it. You can use a custodial account to where you put it into a custodial account for them, and then you can use individual stocks. So you get a little more, if you're good, you get a little more upside there because you have a wider menu of investments. Again, these do have some rules associated with them and some taxation stuff associated with them that it's best to learn ahead of time instead of along the way by making mistakes. But that's another option. You give them money, and then when they become 21 in most states, then that becomes their money. They can take it and burn it at that time if they want, or buy a car, or take a vacation and say thanks. So the first stuff is education. The second, there's no rules on it when it goes to them. The third one, though, if your child is of working age where they, more than just dog walking, babysitting, but literally are getting a W-2 or 1099, then they can open an IRA. So what my parents did for me is, I'm saying you've heard the story, but I'll tell it again as quickly as I can. I was 16. My parents came into the other room and said, Steve, you need to get a job. I said, point of order. You have said for my whole life that my job is to get good grades. I have hit home runs in the grades department. Why do I have to go get a job? And they said, blah, 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 IRA, blah, blah, blah. And I didn't care, right? Part of that, they said, if whatever you make, you keep, and then we'll match money into your IRA. And about that, it's like the dog cartoon, blah, blah, blah. And then free money kind of came through. And I was like, that sounds like free money. And they're like, well, if that's how you listen to it, then yes, that's free money. So I got a job, first one working at a tennis center, literally cleaning toilets on a golf course. Not the best job, but whatever. I made my $2,000, which I got to keep, which was the max at the time because I'm old. And they matched $2,000 into my IRA at the whopping age of 16. Yeah, that's a pretty good start when you consider I'm a little older than 16 now, and that's had some time to appreciate. And then they showed me the, things double, Rule 72, double every, 8, 9 years, blah, 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 blah. And I was like, hey, it's a pretty good way to get started. So if your kid has earned income, new kid, and W-2, 1099 that you can prove to the IRS in case they get audited, it's not a real high audit risk. I've seen the audit scores, which is probably another topic for another day. So low audit risk, but you can set these up for your kid as long as they're working, then they do have at least some seed IRA money. And then when they graduate from tech school or college, wherever they go to, they can't just take this money and burn it on a new car or vacation without paying a pretty hefty penalty. So most people aren't going to do that, but they might in this custodial account. So anyhow, differing levels of control there and fences for that sort of thing. But probably the biggest benefit of is if you get your kids interested in investing, the number one thing people tell me is when they're lamenting their situation and they say, I wish I would have started sooner. Well, if that's you and you have little versions of yourself out there, help them out, get them started. right? Don't let them go down the same road you did. Try to get them started, get them interested, and then go from there. Both my girls do own Bitcoin, the ETF anyway, and they both knew about what happened yesterday. That's for sure. We don't look every day, but on certain days we look, and that was one we did. So, all right, Mike, I'll transition to you. You can either add to some of the stuff I just said, or write off onto your own. Yeah.
I'll just add on a couple things. So on the 529, I know it hit this a couple weeks ago, but you know, if your kid does not go to college and the account has been open for 15 years, that it can be rolled over into a Roth IRA for your kids. So that's a very exciting capability that we talked about. And then the other thing is, you know, back when Steve was 16, he got that $2,000 and he transferred it to me on the golf course. So I was happy that he got it too. So anyways.
What? I don't recall that exact version of the story going down. Maybe $20.
Maybe $20.
I'm a net negative to Mike on the golf course. I can guarantee that.
Okay, let me cover this. So Jeremy Siegel, who when I did my MBA, one of my absolute favorite books was Stocks for the Long Run. I'd absolutely recommend anybody looking into investing, getting their kids into investing. Phenomenal book. Takes a look at, you know, the advantages of the stocks. Very mathematical. Love the book. Steve got me an autographed copy last year, so thank you. It was like version 6, but I still have my old version too. But anyways, Jeremy Siegel comes out and says that Trump is the most pro-stock market president in history. Pro-business policies. Of course, we see the market jump. Has to do with tax cuts, deregulation, all kinds of things that can help the stock market grow. Now, just because he's the most stock, you know, do we get all the gains, you know, in the last 5 days? Of course not. This is going to happen out over the next 4 years. He has a limited term, so it's only going to be 4 years. But, you know, will Trump certainly deal with, you know, hiccups across this world and things that we don't expect? Yes, absolutely. It's not going to be a straight ride up, but it certainly is good news. So the other thing, I wanted to pull up this article. Wall Street Journal came out yesterday. Your money in the second Trump term, and it pulls out a couple pieces. And when I read this article, and I read it on the paper version over here, but I'm sharing you the electronic, you know, the one, and we already talked about this, and we will be watching this first one very closely. So the Trump tax cuts happened in 2017. You know, different presidential configurations would say, oh, they're probably not going to be renewed or extended. They're going to expire in 2025. That was the expectation, but everything seems to align, and they'll certainly have to talk about, you know, what's the cost of doing this. Nothing's for free, but a good chance these will get extended. So that's good news. In the stock market already is kind of showing that, like, oh, hey, they're not going to raise the corporate tax rate. Yay. Well, therefore our stock is worth more. Therefore, you as an owner are worth more. Other things that came out in this, and you know, student loan relief and forgiveness. I know there's been a lot of talk about this over the last 4 years. Some of it is, hey, will you vote for me? I'll give you $10,000. Maybe that wasn't the exact message, but it seemed like it was to me. You know, I have friends that have student loans, and I said, hey, I don't have any, but you know, if you get 10 grand, I'm happy for you. And, you know, therefore I'll just transfer my wealth to you. But anyways, less likely that's going to happen as far as any extension. And for those of you that paid your student loans, got a scholarship, paid your debt on time, you know, hey, it seems more fair now. And then the last one, I saw this, and I wasn't sure how far this got, but they were talking about putting an $8 cap on credit card late fees. And I want to say it's probably more like $25 or $30 for a late fee. I don't know exactly. I'm sure it's written in the fine print on my credit card. But, and so you say, wow, cap it at 8. That seems like a good thing. Well, it's a good thing if you're the one getting late fees. It's a bad thing if you're the owner of JP Morgan Chase, or you're the owner of Discover Card or whatever. You know, you're the owner, you can't charge these late fees to make up, because keep in mind, some of these things default and they have to write off the whole debt. So to make some late fees along the way, they need it to be profitable. But the expectation is that's not going to happen now, that this will get back I don't know how far it was, but they will, look to back this out. So, I guess, don't count on $8 late fees. Just pay your credit cards on time, and more importantly, try to own the companies to make good money. So, couple things impacted. I know that we're going to be talking lots about Trump tax cuts and extension of opportunity zones. We're going to be talking about this all into 2025. You're starting to see cabinet members being named. So continue topics, but here's at least a touch base coming. Back to you,
Yeah,
Steve.
you bet. So more, presidential election itself. You can go ahead and bring that down, Mike. That took the unknowns of which way the whole country was leaning, right, as a whole. That gave us more knowns, and then each day that goes by as he forms the cabinet and stuff, that's more and more knowns, and all that stuff gets priced into the market. Obviously, the market since the election has liked where things are going. Don't that can be we talk about in the office all the time is like, are we on a sugar high? And if so, what happens when the sugar high wears off, right? Or is there going to be lasting change, right? So there's rhetoric up front, but the problems don't go away. And even when even if the new Trump administration aggressively tackles them in January, these things take months, if not years, for a lot of these things to take place. So curb your enthusiasm. Don't have FOMO. Don't sit at home thinking, oh my gosh, I missed yesterday's big move up, right? So slow and methodical, use a process. And that's what we do here at Ankerstar Wealth to manage your money. So with that, we will talk to you guys tomorrow. Have a good one. Bye.